Welcome to the Sofia Crypto Meetup event, the monthly event. So this microphone is actually for the video recording. So don't expect my voice to be amplified. It's gonna be that loud. Yes, and this is the 37th meetup that we have dedicated to the crypto markets and the fundamentals. We have very interesting speakers today. But before we begin with the main part of the event, we will start with the biggest news during the past month, which resulted actually from the poll that we do every month in the group. And Ivan is going to take over for this.
Thanks. So, yeah, as you know, every month we have a poll in the group, and you guys, ladies and gentlemen, vote on what are the top events of the month. So BTC moving above 5K, which kind of ties nicely to the topic of today's meetup. So what happened depending on where in the world you are, 1st or 2nd of April, BTC price increased by about $1,000 or 20% and crossed the 5K limit again for the first time in a year or so, on the way up. Yeah, like basically reactions were varied, but literally no one knew why it happened. I hope we'll get a better explanation of what and why happened during the panel. Different theories, so I tried to put a visualization here. So basically about $500 million got short squeezed on BitMEX, meaning levered short positions were liquidated, and yeah, that were worth $500 million. That's one of the explanation. There was some conspiracy about a mysterious 20,000 BTC ball across 3 venues. I think it was Kraken, Coinbase, and Hotbit, I think. Upbit. But that's still questionable. And like I think one of the most absurd one was that apparently some bots were checking sentiment, and because people were fooling around on 1st of April, making jokes about BTC to the moon and all this stuff, so the bots picked up the positive sentiment, and that's why it pumped, which sounds really ridiculous. Something that actually is, I would say, a positive development. So the SEC, they released 2 significant documents. One of them was a non-action letter. The other one was a general framework for evaluating investment contracts. So the non-action letter, it's the simpler one. It's basically a project in the US, which is like a small private jet company, issued their own token. And the SEC said that it is clearly not a security. It's a very specific case. Basically, the platform is live. And like throughout the entire document, the company says 500 times that the token is worth only is going to be redeemable only for $1, never less, never more, and it does not hold any value outside of the system, which begs the question, why do they need blockchain for it? But anyways. And the media, of course, reacted with ICOs are illegal now, which has nothing to do with the letter. And then the second one was the framework for investment contracts. Basically, the summary of it is most ICOs are still securities and probably were illegal. Some of the like more basic points. So first thing, for an ICO to not be considered a security, the network on which the services to be used or paid for with the token should be live at the time of the sale. And another interesting thing was that basically the amount of tokens that people receive or buy has to be in a reasonable enough amount for the token to be useful. And that actually ties to the very popular through 2017 and 2018 airdrops, where projects would just send like a tiny amount of tokens to people to increase awareness. And that's still a security because basically the amount that you receive is not enough for you to use the token in a meaningful way. And the last thing is, I'm going to have a hard time explaining that. But hopefully some of the guys in the audience who suggested this as the news can help, or his teammates. So basically, it's a zero cash proof of concept on Ethereum, a UK-based company that is advised by Vitalik and is focused on research. They basically published a paper that they've successfully made a zero coin implementation on Ethereum. The significance of that is that basically this implementation would allow for confidential or private transfers of not only ETH, but also all type of smart contract-based tokens. The three most common ones, the ERC20, ERC21, which is the non-fungible ones, and ERC 1400, which is the security token standard. So people will be able to transact those in a confidential manner on the Ethereum chain. And in very layman terms, ZK snarks means basically you are able to prove that you know a piece of information without revealing that information. And yeah, Milan will have a talk about it on, I think, 21st of May. Yeah, and so yeah, you can learn more about it there. Those are the top 3 news. On every meetup, we do a graph of the price. And funnily enough, the amount of people in the audience correlates very highly with the price. So, earlier today we were surprised that price is up and like there are no people, but I think just people arrived late. So yeah, because of the very short time frame when BTC was shooting up at the end of 2017, actually you can't see it here because yeah, we had a meetup at around 11,000 and then like already on the way down around the same level. And Vitalik's famous middle finger, which is the Ethereum graph. Yeah, we see some uptick here as well, but not as substantial as with Bitcoin. And yeah, we can move to the main topic of today.
Yes, thank you, Ivan. Actually, I learned a lot of things from that, so that's pretty useful. So before we start with the panel, in which Maksim from Sentiment and Blagovest from blockchain.bg will be the primary experts, I'll give the word to Bobby. Oh, right here, okay. Who will have a short presentation to kind of smoothly introduce us to the topic of crypto fundamentals. And there you go, Bobby.
Thank you very much. Everybody knows that crypto fundamentals are not related to the price, right? Okay. So, that's the end. That's the end. Can you? Very good. Okay. So my name is Blagovest Belev, the founder of blockchain.bg. Very quickly, we are a fund managing people's money, helping them avoid the biggest risk related to crypto investments. That's market timing, not selling at the bubble levels or not buying enough at the bottom, or not buying the right coins that may win in the long term, or not storing them safely enough and rebalancing the portfolio timely. So we try to alleviate the risk of everybody so that they can sleep well and still have exposure to the crypto market. And that's why in this context we're very interested in fundamentals and also technicals and all kind of analysis. Currently we're speaking just about fundamentals. What does that mean and what some of the numbers are. And the price in the very long term correlates with that, but not in the short term. So if you're expecting an explanation why it jumped so much recently, I'm reluctant to give that right now. But let's see. The price is usually very related to the short-term perception of people. So that's why it's unpredictable. People try, especially the news, try to give explanation for everything, but they rarely can pinpoint a reason why the price jumped or fell. But they're just looking for a headline. In the long term, however, the fundamentals is what plays the biggest role. And the fundamentals is what is delivered to the users as value. But that plays in the very long term. So in most of the cases, price doesn't equal fundamentals. And in the long term, as I just mentioned, the price follows fundamentals. That's why we're interested in them. So in the beginning, it's very important to look at Bitcoin fundamentals because it's the backbone of the whole industry still after 10 years. That's a chart plotting a lot of the major cryptocurrencies, and you can see that the shape is pretty similar, meaning that they all move in correlation with each other. They don't really move a lot differently. So once Bitcoin starts moving, it's very likely that the rest of the market will follow at some point and not the other way around. It's very unlikely still that a coin moves or gets an all-time high like Binance did recently, and this to be the catalyst of the movement of the whole market. If you want to know what the market will do, you better watch what Bitcoin is doing. So here are some of the fundamentals. That's the logarithmic chart of the transaction volume measured in US dollars. This is, let me see. This is where the number of daily volume that was moved within the Bitcoin blockchain during the peak. That was about 16 billion, if I'm not mistaken. Data comes from Coinmetrics. And now is about 2 billion, a bit, around 2 billion. So it has recovered a little bit, but nearly not as far as the peak. That was the previous peak in late 2013, followed by a big slump down and then a recovery. So probably something like that could happen in the future if the cycle repeats, which we believe it will. So if you take that as a fundamental metric and plot it against the price, the market cap, you get the so-called NVT ratio, which is the whole market cap of Bitcoin, divided by the daily volume. And this here is the price against logarithmic. This is the previous peak in December 2017. This is now. This is the previous peak, December 2013. This is April 2013. So you see after this cycle, the high of the cycle, it's a lagging indicator, but anyway, the ratio went up way higher compared to the previous period. Then it was in the normal range. Then after this big bubble, again it went higher, and it still hasn't recovered. In the very beginning here, it took a little bit of time for the network to start moving and the ratio to rebalance, so the data is not very accurate, so I normally try to ignore everything before 2012. So that's still showing potential overvaluation of the network right now. The NVT signal is very similar to that, but instead of taking the daily volumes that are going through the Bitcoin blockchain, we take the 90-day average of that, and again we divide the market cap by this number, and this, funny enough, there is no reasoning behind it. It's just a matter of heuristics. Somebody tried 60-day average, 90-day average, 120-day average, and it turned out that the 90-day average gives a pretty good signal in terms of where we are in the market right now. And look at let's say after 2012, there's been 1, 2, 3, 4, 5, let's say, and now a 6 point where we're so high in above normal levels. And all these have coincided with significant tops in the market. Here, that was not a very significant top, but the market actually declined a lot after that. That corresponds to this one here. This from December 2017, this is from most of 18, and this is now. So according to this fundamental metric, it doesn't mean that the bottom for the cycle is in or not. It just means that we are overvalued right now and we're due for a correction. Where it's going to stop down, we don't know. It may make another bottom below 3,200, or it may not, because this metric depends on daily volume as well. So we don't know where they're going to meet. But I'm pretty sure this will come back here at some point. And that's probably going to be the best time for a long-term purchase. Long-term purchase with, I don't know, 2 to 5 years horizon. A realized cap is another fundamental. It may be a technical as well, but it's somewhere in between. This is measuring all the coins that have moved since the beginning of the network, and multiplies them by the daily price of the time they last moved. So it may represent, it may be the closest approximation of where all the coins in circulation were bought or traded at some point. And as of today, this is about 77 billion, and the market cap today was about 98 billion. So the market cap is above that level. And when we plot this thing against the market cap, similar to the NVT, we have this ratio that's called MVRV. And basically, this is the ratio plotted against the price again. And we see here we are today at 121, meaning that that's 98, roughly 98 billion divided by 72. And in the previous cycles, if we say that this was one cycle ending in June 2011, that was another cycle here ending in December 2013, and that another cycle, a third cycle ending in December 2017. In each correction after that, here we have a drop. Normally, here the ratio of 1 is taken as a good rule of thumb, but it always drops below that here for a little bit longer. And all this period of being so low here was a good accumulation time for the long term, and it already did drop in this cycle here, and now it's already above that. And if you see, when it went above these levels, it never came back, and it kept going up after that. So we don't know, it may come back down, but this is a good metric for seeing undervalued periods rather than timing a bottom, or maybe a top is easier to time here, but not really a bottom. Maybe a bottoming period, if you want to average your purchases, that's a good metric as well. So can it move back below 1? It can. Will it do that? We don't know. Good. Delta cap, that's a little bit more complicated than that, but it's still a very useful metric. This punctured blue line is the average price, which means all the days, let's say all the days since the creation of Bitcoin up to now, summed, and then that's the price of each period also summed, and then divided by the amount of days. So I don't know if I explained it very well, but that's the average price from the beginning till now. And roughly right now is about 1,400. But the real price, which is the other blue line here, it touched the average only once here in the very, very beginning, and never again. The yellow line, this orange yellow, is the realized cap that we spoke 2 slides ago. And the one in the middle is actually the delta, this one minus this one. And it seems like the price, the blue line, in every bear cycle has touched this brown one. It's called delta cap. And the blue one, which is the price, has always touched this one here, right on the bottom, and it already did touch it again in December 2018. So that's another signal that this may have been the bottom. Even though it's not, it's only 2 data points, and that's the third one, which doesn't guarantee anything. But still, it's some evidence. I definitely like this one more because it has already 5, and here on the bottom it has like 7, 8 data points. So if you already have 15 correct ones, there's a greater chance that the 16th one will also be correct. But that's a medium-term indicator. Anyway, so the halving is also part of the fundamentals. The supply will drop actually significantly next year on the 24th of May. And you can see these red lines represent the previous halvings of the reward. Right now, the Bitcoin reward will drop from 12.5 to 6.25, and the annual inflation will drop from 4% to 1.8. And every time the halving happened so far, it was followed by a huge increase in price. Will it happen again? Maybe yes. Maybe people will try to front run it, and it will happen earlier. Maybe a financial crisis hits and it happens over here. We don't know, but it's good to follow that, and that correlates with the movement of the whole market overall. The Lightning Network is also developing. It's part of the fundamentals. That's why I put it here. It's not yet very functional, but everybody hopes it will be at some point. About 1,000 Bitcoins are opened as channels within the network. The average channel is, the average capacity is about $1,000. There is about 8,000 knots, and it's constantly increasing. So that's good for development overall, for scaling, because anyway, it doesn't scale any other way for now. Adoption is also part of the fundamentals. What has happened in the recent, let's say, year or two, good news from this year, that Samsung started providing something resembling a hardware wallet on their S10 devices, which is another step potentially for consumer adoption. The custody companies are working hard, not yet fully functional, but obtaining licenses and trying to be ready soon. They will play a major role for the next cycle, where a lot of institutions need to go into crypto. Somebody needs to store their assets because that's how it's done normally. And these are people coming from Wall Street. Fidelity is one of the biggest players in the retail market, holding assets for about $7 trillion. So if all these players move into the space, it will be a game changer for sure. Massively used apps are also promoting and using Bitcoin. So that's, and that's just for now. Ethereum, let's say, for a quick review, this is the daily volume measured in US dollars. It still has not recovered anywhere near the peak from 2017 and beginning of 18. The major dApps in Ethereum, I just downloaded that. These are the daily users. If we can count that as fundamental for Ethereum, but that comes to mind as the most fundamental. And the numbers are really small, like negligible. So we could say that the fundamentals are not playing really here. There's a lot of expectations, but not really any delivery yet. So it's mostly speculation. If we think about dApps, of course, but we could think about other use cases, despite the fact that the payment seems to be the major use case so far. The other dApps, it seems like most of the widely used dApps are EOS and Tron right now, at least according to this website. But it's still the biggest, the 24-hour users is 8,000 users, which is really nothing. And that's it about fundamentals. Hopefully we can discuss anything more in the panel. Thank you.
Nice. Thank you, Bobby, for this great presentation. We spoke with Maksim that if he wants to do a short presentation about sentiment and his views on the fundamentals, he can do it, or we can just start with the panel. So we can. Okay, so then we're gonna start with directly with the panel. And yes. All right, so we are all going to be here and discussing the fundamentals. I can start directly with a question about the apps. I didn't see the DAI app. Isn't this considered something like an important application for Ethereum or something? Oh, sure, yes. Okay, so maybe I can add something that Sentiment is actually doing analysis about the most active crypto projects throughout I think for a couple of months now. And Eternity is actually has been in this in these charts for the past 3 to 4 months, and the last month we were number 2. So we have a lot of development going on in Eternity. What's happening here with the because of the all right, okay.
Not yet.
Just yeah, so they have a lot of experience with data, and hopefully we can see how much experience they have now.
No, my question is regarding this on-chain volume, right? Because it only shows the transactions which are done on the chain, but as you said, a lot of transactions are going on the exchanges. Is there some performance indicator measuring about the volume going on the exchanges and seeing that as a real, let's say, transaction value? And also, second question, the NVT signal does not include the Lightning Network transactions, right? So the question is there some ideas for further development of this signal? Because I like it for showing peaks and bottoms, but it's for sure it's missing any off-chain transaction, and this is the lacking issue on this indicator, right?
It's both questions are good. About exchange volume, I'm not sure what you mean by why would you need it, because there is a big difference between coins being traded on the exchange and thus the exchange traded volume, which is more like a technical indicator, and it's not really related to the NVT. I think what you meant was maybe some payments and transfers.
Let's see like this. We know most of the transactions in the exchanges is fake transactions, right? So it's bot trading.
In a lot of the exchanges, but not all.
90%. So it's a lot of wash trading, right? So the question is, but the real use case of the crypto, like what you said, is payment, and on the other side is trading. Yeah? So what I would like to see is the real trading volume added to the transaction volume of the on-chain volume.
Yeah, but it seems like they're totally unrelated. Like you can potentially use the exchange traded volume for some metrics and the on-chain volume for completely other, because really they have nothing in common. And the exchange ones is just about trading, and the other one is about payments, about moving coins from one person to another person potentially. And that's why you can count it as a fundamental measurement, because it involves maybe payments or transfers or at least movement of coins. The second question about the Lightning Network, you're right, it doesn't, there's no way that anybody knows how many coins are transferred within the Lightning Network, but it's not a lot. I mean, the channels are small, it's not user-friendly, it's mainly as a test still. So I don't believe that significant volume would be found on the Lightning Network that would influence this chart. Not yet, maybe in a couple years.
All right, so Maksim, would you like to?
Yeah, I can say something.
Okay, say something.
Sentiment is a platform for 360-degree overview of crypto market. The thing is, when you have so much data, so much metric, it's a kind of challenging if you're not familiar with what they know on their side or what we know on our side, how to deal with this data metrics. So I will, when I'm showing, I'm explaining a little bit. My background more is doing behavior analytic. So I try to see the group of people who are participating in the cryptocurrency market. They are like humans. So we're all humans. When we see rising prices, we're excited. We don't want to sell. So we buy tops and we sell bottoms. That's normal behavior for everyone. And it's shown on the data. You see right now these two charts. And I'm showing it because it's like happened recently. There is one metric coin age consumed. Sounds esoteric. What it means, if token held for 1 year and then it moved, it will have higher spikes if I bought it yesterday and move it today. Why is it of importance? If someone is holding big amount for a long period of time and then he decides, okay, it's enough, he is a kind of depressed, or he is like, decide I need to do something now because it's no longer anymore acceptable. And we've seen it like many times, and during ICO times, it's typically how initial participants in ICO insiders, they start dumping on the market because for them it's enough 5x, and they're exiting, and then crowd comes. Here, if you hold a long time through nothing happened here. This is where you need to leave the market. No, we are still not panicking. Here where we start panicking. And when you see 2, 3, 3 is the best. When you see 3 times big emotion, slow emotion, slow emotion, well, you can see whoever was panicking done, market can grow, and they're kind of growing. This is how you deal with reading, to some degree, behavior of the market. And I believe it's still esoteric, but it does give you something which majority do not see. And when you see something majority don't see, you can act fast, or you can act first, or you can be in the front of others. And I do believe we based on this data, kind of done, but I can be wrong. Now, interesting thing. Okay, let me set it up to more readable. So, this is an interesting graph. And you mentioned it, MVRV, market value, realized value. How much people paid for tokens at the point when they obtained it, or when it hit the wallet, to what actually is the current valuation of the market. Yeah. Here's how I was asking developers, because they develop many metrics which sometimes I'm not aware of what it means. Here's behavior of, let's say, profitability of people who acting like in 60 days and people who are acting in 365 days. Let's say short term, and even better, and long term speculators or hodlers. Maybe 30 days, 30 days. Do we have? Yeah. 30 days, we remove 60 days, and we'll show differently. Yeah. Blue line is those who are acting on 30-day basis. Pink line, those who are holding long time. Green is the price. Yeah, holding is cool. You see that at top, those who were holding, they were super profitable, according to others, 150%. Now, it's all interesting. The important point here is that we have sometime a kind of flipping in between the profitability or the way they lose, where they're still more profitable, and here, when you hold so long, you become more unprofitable, and then as you see on other metrics, you start panicking because you're too much unprofitable. And there were a lot of funds who invested millions, tens of millions, hundreds of millions. So they do something. We don't know for sure what they do. Do they hedge? I don't know what they're doing. But they're doing something. And when you do something, it's because you feel something. And when the market feels something, you know strongly. This is the moment you need to do if you're speculating. You want to do when the market feeling something strong. And you need to measure, does it feel strongly positive or does it feel strongly negative? The best time if you like doing this kind of trades. So this was just a very short behavior analysis of crypto, how you can use, nowadays you can use it with data and metrics. There is enough data science or knowledge applied. It's a kind of interesting. Now, yeah.
This is the green line, right? The green line.
No, green line is price USD. It's a kind of different level of green. Sorry, yeah. Here says green.
Okay.
Yeah. Maybe there was some because I've deviated to metrics. Did we discuss some specific question? Where we? No. Okay.
We can jump into the questions. I was kind of hoping that 5-year holders are actually the green line because they look very profitable. But who are the 5-year holders? Yeah. So this line? This is price. No, this is the price.
Yeah, this is the price.
This is the price, and this is the 5.
Now they kind of
Breaking even now. So not great then. Not too much.
What does 5-year or 3 months mean?
This is the one who we played.
Yeah. So should it be in front of the camera? Or? Okay. Yeah. Hello. So what's the MVRV? So we divide two values, right? The MV. So this is the market cap. So what's the market cap? It is the total amount of bitcoins multiplied by the current price. And in the denominator, what is the realized cap? So what's the realized cap? This is basically how much people that hold Bitcoin now, how much did they spend to get their Bitcoins? So the market cap divided by realized cap, this is MVRV. This is how profitable on average are the people if they could sell all of their Bitcoins right now at their current price. So if it is above 1, then on average, people would make some profit. If it is below 1, they would lose. So all of those things, we don't take all Bitcoins. We just take a certain portion. So for MVRV 5 years, for example, we look at all the Bitcoins and all their addresses, and we look at only those that have stayed in an address for no more than 5 years. No more than 5 years. Yeah.
So this means you take the Satoshi coins out?
Exactly.
And not, let's say, show it the wrong way.
Yes.
So you estimate the Satoshi coins out?
Yes. The Satoshi coins, they're at the beginning and they're not moving, maybe they're lost. So like if you take maybe 5-year MVRV, maybe this is a kind of a better representation of what's happening right now because we kind of ignore the very old coins. So that's how it works.
Do you also take like the addresses of the Bitcoins on exchanges or only like wallets?
We take everything, including exchanges, yeah. But so for Bitcoin, there are some addresses that are used a lot. Many addresses are used only twice. So one time money comes in, another time money goes out, and that's it. The address is never used again. So the exchanges some are like this. Some exchanges, an address is used many times. And then when we estimate the age of the coins in this exchange, we don't take all the coins to be at the same age. So if, let's say, one exchange has 1,000 Bitcoins in one address, and then like 0.1 Bitcoins moved, this doesn't mean that the age of all 1,000 Bitcoins is equal to changes just because a very small amount moved. So the way we estimate it is we kind of assign different ages to different like tranches of the coins in the market so that you can have kind of new coins but also very old coins that didn't move for a long time. That's
Okay, great. Do you have a question? Okay.
Can you also expand to see if how it happened with the other cycles, or if we're able to see the 2014, 2015, and 2011 maybe? That'll show good picture as well.
Honestly, it's still so fresh.
But when you compare it with some kind of event, for example, 90 nodes actually, then when they built Silk Road 1 and when they found the FBI agents stole a lot of bitcoins, or with some of the dumb news on CNBC, for example, buy Ripple on $3 or something like that. Because if you compare it with the news events, you can gather more info. No,
It's a long-term game, like, doesn't affect like so.
yeah, but if you want to get it to the beginning, the sentiment of the people have. So this is the news, because most of the spikes are news events. They're not only fundamental drivers. For example, before next month, if you compare it on 8 or 9 major channels in mainstream media, they're speaking about Bitcoin, and then you watch it after 3 days of pricing. So the media sentiment is very important, especially in that because the market is very small.
It is, though, one event like hack of exchange have a strong impact on the market in specific point of market. It has almost no effect on other point of market, and it by itself is reflected here. And it shows where we are in the market. If a hack of the exchange does shake the market, we are probably early in the bull recovery. If market don't give okay. If market does not react, well, likely we are close to the top. So you will see this on this data too. But it's very good to, for instance, like hacks, to put it on this chart. Will be very interesting, yeah. Open for collaboration, provide this data, we incorporate it here. We just, yeah, we have so many things to do. Yeah. So, this is a long-term data. Which year we wanted to see? Or even earlier before?
13 and 14.
Okay, 13, 14. I don't know, what do we see here? It's quite, it was quite profitable for this.
Interesting. Look, here you have the two tops in 13,
Yeah.
which are pretty equal. But then, several years after, the first one is way smaller in magnitude. But the thing is, because they will probably decrease over time, as they did, it's hard to not sell here because you don't know how much higher it'll go. Yeah.
Somewhere here, I would say.
Anyway.
The top high is going lower, like every cycle. The top is going lower.
Because the crowd learns. Yeah. Well, this is also very quite easily explained. Crowd learns very fast. Okay, I know the last time we were excited, people start dumping. Okay, I don't want to be the last one now. And it's not only crowd; it's like very big investors. They're very smart, so they will likely start dumping here because they know how it will end up. And there is no way if the big amount start dumping. What can you do against it? Of course, there will be a fight on both in the beginning and the end, but I think, yeah, the top will come earlier. But we will see. We all hope we will see another top, be it this next year or next year, and it will be very interesting to have a talk, see what the data, what really happened. Maybe it's not Bitcoin anymore, yeah? Maybe it's mumble wumble. Sorry, mimbly wimbly, whatever. Mumble wumble, okay.
Just one question for understanding this chart. So it does not show that the people are already assuming to sell. It just say if you keep it a certain time period, you would be profitable or negative. Yeah. So what we can say out of this chart is at the moment, for a certain amount of people, they are almost equal, which means theoretically, yeah, it's little in profit. So which means the hodler, yeah, they went to the valley of pain, and now they, of course, like, you know, and now that the sweats are starting to dry, and maybe there's, because I think is we are talking about institutions to come in, or maybe it's much too early, maybe family office are thinking of getting to the market, and if they want to attend the market, they need coins to buy, right? And if everybody is hodling, yeah, price will not move because nobody is selling, right? Yeah. Okay, but then if it's move up like something, the family office will not go in the market, right? So they are smart enough to go down if it's a bottom, and if nobody is will to buy in, so there is it's. Yes. Yeah, right. But this it says okay. It would be a good point for some people to sell now, right? Okay.
You're completely right. This is a typical behavior. I was in this pain. I don't know. Those of you who are in crypto, you've likely experienced it too. After half, in this case, even more than a year of strong emotional pain, market recovers, you're in a profit. It's very hard to resist to sell. Very hard. I'm not so motivated now because I'm too busy with the project. I just don't care about whatever crypto I have. I don't care. Anyway, like I converted enough amount when it was not far from top. So, but first time when I was in Ethereum, I bought it in 2016. I have no idea what it is, and then it crashed after the DAO, and I realized what it is. When suddenly from whatever your amount is 50% left, and it was your last money, and you have like kind of, you're not alone in this life, you have some other people responsible, it's very painful. So it started recovering in 2017, and I published report, we will make great gains this year. It was kind of famous in our circle, and we published on Forbes. Still, for me, great gains. It was from 7, I think, or from 8 to 46, I sold good portion because it's like 7x. I couldn't hold anymore, like so very. So you know what I felt when it was 400 then? I sold another big portion. Yeah? And luckily we have now, and I didn't have any data. Yeah. And but then I came with the idea, let me do sentiment project so that next time I have the whole team and they will give me data not to do it anymore. It's interesting Ethereum miner statistic. Let me show you some very interesting stuff. Now, this is I promise you, 2% of people on the market have ever seen it, even less or thought about it. So you're in a unique position, you're seeing something very special. Yeah, really. I'm not kidding. So what does it show? And actually, it was not working for some time. We keep fixing it. Luckily, 2 days ago, I think well fixed, so I can show it now. Green line as usual price. Now Ethereum price. Rose line. This is an interesting, and this is exactly why I'm showing it because you mentioned it. Pain of hodler. This is amount of hodling for Ethereum miners. Yeah. So they're mining. And they are not selling because, well, first they believe it to some degree, especially initial stage. But look what happened left. Do you have here, Lazar? This is where we want to look. Okay? When it grows, it means miners keep accumulating. Oh, they accumulated a lot. Wow, my goodness.
Price is very low. That's why they're accumulating. And there are really a few miners now, because it's very unprofitable to mine Ethereum at the moment. Like now getting better, but still. Yeah, so it's profitable if you steal it.
So now let's, because we're on the topic, and okay, let's dive into, partially deep into some unique metric. Here on the left, there was one specific time when they really decreased their holding, and really strong. And when it happened, after this period of intensive pain, which I experienced myself, all the DAO hacks, all the DDoS attacks, all the, at that time, initial tension between Parity and Ethereum Foundation, yeah? Insiders were like, felt it, will say, oh, now we're really like in deep troubles. But magically, Ethereum recovered and went from 6 or 7 then to 8, 10. And what miners start doing? They start dumping because they had enough pain. They now want to cash out. They want to realize their profits. Now, see when they start or stop dumping. I don't think it's coincidence. At some point of time, they believed, oh, wait a second, now it looks like we are really good. And if you've been in Ethereum, you know this. There was a kind of switch when suddenly realized, oh, but we are really cool now because all I see are run on our platform. and everyone is raising a lot of shit tons of ICOs Ethereum, and it's only run only on Ethereum. There is no competitors at that time. We are in a good position. So starting from that point of, everyone knows Ethereum is cool. So they start accumulating again, yeah? And of course, what they keep doing, do they dump? Well, they should have dumped in here. No, we are cool, we're still fine. Now they don't accumulate anymore. They say, well, are we really cool? And I'm waiting, that if you ask me, I'm waiting for a strong buy signal. I want to see this price Ethereum increasing, and they say, okay, enough pain. Now I want to realize profits. When I see it, well, I think I will buy quite some, but it's my approach. And you know, it's not investment advice. It's sharing my emotions. But you can get access to our metrics. It's not so expensive, I think. I don't know. There is. Oh, sorry. Sorry, it's a wrong one.
With the new consensus model of Ethereum, sooner or later that miners again will continue to accumulate money, because sooner or later the proof of work will be dead, and then with all the consensus node, these guys again will be pretty rich if we believe that Ethereum will continue to be alive. So that's pretty offensive, because the rich will become more richer. So that's double evil. Because there will be no way of decentralization, because staking for one node will be 50,000 Ethereums or something like that.
Oh, actually,
I think it's even less than 10,000.
they said it's going to be quite low.
They said it's going to be
32 ethers or something like this.
Well, if you're a voting node, but if you're a master node, it will be how much you can collect, and who has more will be guaranteed that it will be good. So,
Yes, sorry.
So we are looking for a time when these guys will start selling, and then their selling will not affect the price, because it should keep growing even though they're selling.
They're holding are not they're holding not critical for the price. It's just a behavior. They don't believe, or they think it's a good time to sell now because tomorrow I'm not sure it will be a higher price. Something like this.
How are they subsidizing their business model? I mean, if the price is lower, that means that to cover for the electricity, for all the other expenses, they need to sell more and more and more Ethereum. And this, I mean, I don't understand how is this calculated. Like,
that's a good point, If you live in China, for example, me and you, if you create a new entity in some far, far away governments in the middle of the nowhere, for example, in the Mongolian desert, the Chinese government gives you subsidy 2 years without paying the electricity bill. Or if you know a corrupt Chinese Communist Party official and he say, okay, use the electricity of that dam, for example, the electricity is free. So again, these guys are making a lot of money, because there's some kind of back from the Communist Party.
monetizing any of it?
No, they're monetizing it definitely, but I think the Chinese guys just moving money out of China.
There was a news recently that, I mean, that's like the next thing, that the Chinese government is going to ban crypto mining. But we kind of keep hearing these things, and they never get realized. So in the past, I think the market reacted much more to news coming from China, and now these things don't really matter. I say these are my observations. People just know that the news coming from China might be fake, might be old, might be just kind of clickbait types, and then don't react, because China banning crypto mining should, if this is real, should have a major effect. Maybe just short-term effect, but on the price, because most of the mining currently is happening there. Yeah.
It's moving to other countries also. They have like real projects to countries like in Central Asia, that electricity is even cheaper than in China. That's a fact. So they're moving even there and doing like projects that, for example, Europeans wouldn't go to.
Yeah.
Because like for us it's even dodgier than Bulgaria, for example.
I have a question that relates a bit to the metrics and to the data. So there is a lot of data, and a lot of it is very noisy. You know, fake volume on exchanges. A lot of people now exchanges are safer, so a lot of people they would buy and they would hold, but they would hold on the exchange. So, you know, OGs would take money out of the exchange immediately, but newer people, especially, they would hold a lot of money. So the data is very noisy. It's a very short time frame, and like as Bobby said, okay, we don't look at the beginning because it was too early. So, like, how do you know if an indicator is actually good? Because you have a very short history, then you cut part of it because you decide, okay, this is too noisy, and like, how do you find a good indicator?
It's hard to find good indicators, but the good thing is that if you exploit the data, you could find at least 2 or 3 or 4 that have a good chance of working. And if they're all pointing to one thing, then the chance is very high that they're correct. And also you don't need to, you don't need to time the exact bottom or the exact top. You could always, I think the smartest way is to probably average in or average out over a certain period of time. If you really try to find, to get the bottom or the top, the market will find a way to trick you out. But if you have 3 or 4 indicators that point to a top or a very overbought condition or a very oversold, you could just keep getting in.
Okay, there are 2 parts how we develop or investigate new metrics. One, because the market is broad, interest is very diversified, what people look in short term, long term. So we develop many metrics which I sometimes think they have little value for me. But some other people see the value in them. And the noise or how to remove the noise out of it, I agree with Bobby, the only way you put many of them. Yeah? One of the reasons you see here like many of Ethereum related metrics, because 1 could be noisy, 2 could be noisy, all of them more or less give you much clearer picture. And you need to, you need some experience. So let's say, I believe in crypto, you should come through one bear market. You should.
Bear market is not a bad idea.
This teaches you a lot. First, you know how it feels. Second, you will be dumping when it starts increasing. It teaches you a lot again. And then next time you look for yourself what the metrics are, who are the people, how they reasonable are, you know where they're coming from, how they react. It's much more clarity in your head and your perception of the market. Still, you will be wrong here. You don't know where exactly top, where exactly the bottom, but you will be much better in range. Are we like closer to buy or closer to sell? Again, the noise is removed both by combining many different things and by having your own experience and knowledge. And if you don't have experience knowledge, it will be too artificial knowledge, just looking at metrics. If you have only your emotions, it will be too strong. You will be like this minus, dumping early, and don't see that others are doing the same. So maybe behaving like a crowd, not the best. But if you have both combined metrics and your experience, you are in a good position, I believe. And this is the way how you achieve clarity. It is not supposed to be easy and simple and accessible for everyone. It has to be like through sweat, pain, and great effort. So a few years and you're there. Yeah, I think.
So my question will be, because we're talking about indicators and the general picture, but where do you think we are now? Like what's happening now? Are the indicators pointing towards like the bottom? I mean, you mentioned this a couple of times, but how can we? Do you think that what happened in the last 2-3 days is in any way connected to any fundamentals, change in fundamentals, or it's just some kind of a fear of missing out or some weird behavior of the market?
No, as I started in the presentation, nothing in the short term is based on fundamentals. It's all about perception of the market, where people think we are, and a ton of other factors. Where we are right now in the long-term cycle, I believe there's a good chance that we've passed the bottom, but we have to be careful and watch again all these indicators during the next correction. And if you see a good point to buy during the next one, it's probably a good long-term entry point. Relatively, actually quite low-risk entry point. Another thing that we haven't discussed tonight is the possibility for another world financial crisis, which in our opinion will further push the market down, at least in the beginning of that. Fortunately, such a phenomenon is not on the horizon for the next 6 months, let's say, if that's the longest we could foresee that. And if it doesn't happen within the next 2 years, then we may very easily see another speculative bull market, similar to what happened in the internet bubble 98 to 2000. So it's very possible that we see that. And the end will also coincide with the next crisis, possibly.
If you want to continue on the question, Rosé.
Yeah. Not investment advice, right? To be clear, I'm sharing like just personal opinion.
No, I thought you asked for a question.
Okay. I would like to see more excitement, more FOMO, and more people saying, wow, I'm really missing on a bull run. So for this to happen, maybe we need to see 7,000-8,000 per Bitcoin. Yeah. I don't see excitement so much. I see some hype, but it's compared to what I've seen before. No, I want to see it more. But then, it's like we're not done at the bottom. It's like there are a lot of shady stuff going on in crypto. I don't know if you're aware or not, all this initial exchange offering, all this market making, faked washed volumes. It's like if you know based on the data what's really going on, wow, you think how it's still alive. Why so little people are in prison? And when it pop up, we don't know, but just simple metric, there is lack of FOMO, I think it should go up. And when everyone believes now we passed the worst, well, it should go down. It's typically how it behaves. Yeah? And it's a good point looking at indicators when you can buy at a relatively low risk. It will be very hard when we're at, I hope, like 6,000 or 7,000. You will all feel FOMO very strong. Keep looking at indicators. Yeah. Like Binance, like I feel very hard time not to buy in. I know it's a kind of it's not a scam, no, by no means, but it's like wow. And I feel okay. If Binance made it to actually it broke all-time high. If you're not aware, it's the first. Yes.
Or the IEOs.
Binance coin, it's above its all-time high. So for them, it's like Bitcoin going over 20,000, or Ethereum going over 1,000. There is already example one. Maker still not there, but not too far away. Even though they have their own problems now. So yeah. Oh, it's clear. Initial exchange offerings, like ICOs on Ethereum, same reason. Market know it works nicely, so there will be chance. Yes, I'm not the last one. I'm not the last fool. There will be more. Yeah, so it's, but it's a harder game now. You see, just as soon as there is some signs it's getting hyped, well, it crashes immediately because market know, okay, I need to sell it now. There will be others who knows how it works. Market is smart, so it's like actually it's quite unpredictable now. Very hard game, but more fun too. Yeah.
No, my question was about the statistics showing some information about the stable coins impact to the price erosion of the Bitcoin in end of 2017, and a lot of rumors that something like, let's say, the US Tether manipulated or Binance and Kraken manipulated, Bitfinex and Kraken manipulated the price by printing Tethers. So I guess for sure you have some statistics seeing about, I don't know, market volume of stablecoin compared to price and impact on that, or so, I don't know. Or what your ideas about this?
Because this is how it works. It is, well, you all know Tether was a top, I think, 2.5 billion market capitalization, maybe 3, I don't remember. It was really huge, and indeed, we saw in the data that projects are pumping because of Tether. It's like flowing, especially altcoins, like not so much Bitcoin, partially, but there were other players, but many altcoins because a lot of money flowing there on Bitfinex, and it's growing. But who is doing it? I don't think like Bitfinex themselves, or they don't need to do it. They are very fine with commission, or maybe they are doing it. Maybe they, money is never enough. So how can you prove it? Like, you don't know who is really pressing the buttons behind. But the capitalization is a simple metric. Was actually, let me see. I did not look. So this is where we know platform. You have categories which we did for customers to make it a bit simpler. So there is here and data. We're talking about that, and now it's market. Oh, it's still well. I think it became higher.
After the 5K pump,
Mm-hmm.
they injected.
Oh wow, we don't have any data. What a pity. Now I have a typical Bill Gates moment. Oh no, we have data. Cool. Market cap. So this is how market cap compare with ad price. Yeah, we can do like this. So something. Both of them are kind of dark. Let me. Very dark, like this dark, is the price of Ethereum, which is very correlated to Bitcoin. It would be cool to remove green. Okay, we cannot. And not so dark, like here. Yeah. I think it's a market cap. Now let's see, because actually very good question. I did not look in details into data. Yeah. So this is a price, be it Bitcoin. In this case, an Ethereum price. And this is how much it was printed, or partially. Actually, people maybe did put USD, even though based on factors they never did a real audit. Maybe they did not. Who knows? Yeah, very much correlated, I would say. Yeah, price is growing together with market cap, but price is crashing, and then it stays stable. Now it's growing again. Yeah, correlation is clear. I would say close to 90%, at least here, like very correlated. But once again, it could be the fact that people indeed use Bitfinex, at least to some degree, to invest and participate in all this madness, which was end of 2017. I wonder, any ideas how we can do research or prove what's happening background? As you heard, we have quite nice data scientists. They can do a lot of stuff. But yeah.
Once again? What you showed that's going up is the market cap, it's not the price.
Here?
Yeah.
Yeah, it's market. Is it market cap?
Yeah.
It's the market cap.
Pretty much sure it's the market cap.
Yeah, right. Okay, yeah. So here. Actually here, price is at the bottom. but it's a Ethereum price. And Bitcoin grew a little bit more lately. I would say market cap growing. When you look in this chart, it's for you visually to see how to say, like, acceleration, how strongly something. Appreciate how much is appreciation of market cap related, I would say, to the price. Well, quite some. $500 million was printed.
Yeah, so this is the market cap of Tether, and because the price is fixed, it means that they pumped new supply after the appreciation of Bitcoin. So that's maybe last questions.
Any questions you have? We have a lot of charts. I wasn't expecting that many charts here, but it's very interesting to see. I mean, I guess, like, I've never been such a trader. Although I've been into the cryptosphere for a while, I've never looked into how to be more profitable. I'm more of a hodler myself, and it's just so much easier. It's just, you don't have to do anything. But as you can see, it's not the best strategy, despite what a lot of people are trying to convince you. But if you don't know anything about charts or price, maybe it's a good strategy. I guess you want to say something? Huh?
Just a little comment. It's not very. It's a half to full-time job to be actually even trying to time the long-term cycle. So if you don't have that time, just hodling is great. You don't. Yeah, it's not so easy though. The emotional wave of ups and downs and patience of waiting years, it takes a while.
Actually, I think there are contracts that they can lock your coins for a specific time, and then you just don't have access to them for 6 months. So even if you want to sell, you cannot do it. I'm not sure how many people are using that. Maybe there should be a chart for that. Okay, any questions from the, yeah.
Thank you for the information, and seeing so much fundamentals, also sentiment, and also, of course, graphs. How do you see the future of the trading bots and artificial intelligence in this process? Because as we see, the more data we collect, the more precise become the future expectations and this kind of thing. So how in the future will be artificial intelligence, together with the bots, of course, are as a part of the trading market as a whole?
It's an interesting question. I think there are a lot of bots already, like, doing a lot of work on exchanges. I think there are also some exchanges, especially the shady ones, that are primarily made of bots. But yeah, what do you think, guys?
Well, in my opinion, bots are no more than algorithms, right? And somebody writes them. So there's still a human designer behind them. So the human psyche is also involved in this whole thing. Of course, if you know how to use algorithms and input different metrics into them, actually, this may be something like that. I mean, if you don't have that data, you're worse off compared to if you have it. So if you're able to create an algorithm that incorporates a lot of data, including exchange data and trading data, maybe you'll have a great outcome. But usually this advantage is taken over by the market after some time, because it adjusts itself. Other people also find advantages. They take them, and quickly the opportunities are gone. So after a while, you have to create another algorithm. Yeah, that's how markets work. There is no formula that's going to work forever.
There was a really cool paper. It was called Flash Boys 2.0, and it was about bots front-running decentralized exchanges. So basically, bots are playing a major role in the market, and they'll continue playing an increasingly important role. But for the average person, it probably wouldn't make sense. So unless you're technically inclined enough to do it yourself. Just a side note, because last time we spoke about scams, there are a lot of people selling you bots, and they rely, I mean, if the bot was good, they wouldn't have to sell it to you to make money. They would just load it up with capital. So yeah, like the bot advantage would converge towards big institutions that have a lot of processing power, a lot of really smart PhD people, and that have the capital to force, for example, transactions on chain and like, yeah, make sure their transaction goes further up in the meme pool, etc.
Okay. So, bots and automatic and artificial intelligence, like, I think it's consensus here. It will arrive and it will be very strong, but for what will be strong? It will be strong, I believe, for shorter time frames. Because regardless what you're doing with your bot or trading, when you are investing like a serious money, you're concerned about the risks. So you're limiting your risks. And it's a no-brainer that right now bots are working with supposedly low risks when they do arbitrage. The risks are there quite nicely defined and you know how to deal with them. Now, bots which are trying to implement artificial intelligence, they will likely start working with on-chain matrix, deposit to from exchanges. We have this data and we see like it's quite good signals. Someone is probably already using it now, but it's short. Like, you know, something happened, it will have effect over the next few hours, maybe right now even maybe 12 hours, and it will get shorter because you're not the only ones. Now, is it possible, and the good thing for us humans, we're not run by bots. Now, is bot possible to predict and play the game Bitcoin from 600 to 20,000? No, no way. Because the data which we have now, we can analyze, which come along, how was the bottom from 6 to the top of 20, it will be different one when we do next run up. It will be different with every cycle. Human learning, if you want to use semantic data or like sentiment analysis, you apply it to what you learned before, but human also very smart. They don't track the same way. They try to manipulate the market. They already do it now. You see it, they spread false news just to see reaction, how people react, how price react, and they try to play it. It will become very interesting and sophisticated game of minds. So you cannot, based on the data you've seen for the last 2 years, okay, now I know I'll write the bot which will buy the bottom and sells the top for the next Ethereum, whatever run. It will not work because that will be different. Mood will be different. It will change much with them. You will maybe exit at the wrong point of time and enter again at the wrong point of time. So we have advantage for the moment as the humans. But once we run the full circle of, let's say, like I would call it first innovation circle, when Bitcoin, Ethereum, I hope it survives, and some other blockchain and some other project came really to big potential where the huge correction is needed. At that point in time, we will have data for all major up, down, up, down, up, down. And then there will be enough smart people who will say, okay, we've seen it in .com, we've seen it in many others, we've seen it now in crypto. I can try to play this game on a bigger scale. When it comes, 3, 5 years, no one knows. But we still have some time to enjoy humans against the bots. Yeah.
All right, do we have any questions from the audience? Anything that you guys want to ask the experts? Or we should close this meetup of ours. Okay, so before we close, I would like to give the word to Bobby, who is going to introduce an event that they are organizing in May, or was it May?
Yeah. Just real quick. All the research that we've done and analysis and everything, we're going to try to share in a couple of hours here again in this room on the 9th of May. So if you're interested, we're going to discuss fundamentals, but also technicals and pretty much everything that we've come to a conclusion so far. So if that's interesting to you, you're welcome to join us. Thank you.
Will it be an online event? Will it be an online event?
Probably after, we may record it but not the event itself, but maybe after that we could do a recording and publish. There is a very high chance that we do that as well.
Where will it take place then?
Yeah, the event itself will be here, and then we may record it because we need screen sharing and everything. We'll record it a few days or a month later, but we'll publish it.
All right, guys. Thank you very much for coming, and see you next time. And surely, thanks very much to Maksim from Sentiment and Blagovest from blockchain.bg for their charts and knowledge. Thank you.